Phil just laid out some of the holiday flight outlook right now. Give us a sense. We're talking about hotels, other places to stay, leisure activity throughout the holidays and into the new year. What is your outlook?
Now, let's separate those two. From a holiday perspective, Thanksgiving and the festive season are not particularly great times for the hotel industry. People travel a lot, but they stay at their houses or someone else's house. What we see in the year ahead, though, is encouraging. We see business travel continuing to ramp up from its kind of COVID period. We see group activity, group demand on the books looking very, very strong. We see continued healthy, although normalizing leisure demand and higher rates again as we pass on this inflation to the consumer and the business travel. So next year looks pretty good from a fundamental perspective. I would say the biggest concern we have is certainly the economy, the macro picture. If we head into or get into a recession, that's not good for the hotel space.
Right. I mean, economy is always a factor, and I think pretty much every business. Phil, I want to come back over to you. The CEO of Hilton was on CNBC just a few weeks ago saying that he saw, or he's seeing from his customers or hearing from them, that business travel is going to pick up in the new year. Are we seeing the same thing when it comes to flights? Is that going to be a direct benefit for flights as well when it comes to business travelers?
Yes, but it's a little harder to measure, Frank, for a couple of reasons. One, the business travel patterns are still completely different than what they were pre-pandemic. One area where the airlines are watching and saying, well, maybe we'll see some improvement here are the single-day business trips. Now, I know that's not as helpful for the lodging industry, but the single-day business trip was a big part of business travel pre-pandemic. Since the pandemic, it has been slow to return, though that is starting to change. I'd say over the last 6 months to 9 months, when I've talked with airline executives, they say, yeah, we're starting to see a little bit more of that. That's an area where there will be a lot of focus because that will tell a lot of the airline executives as well as the industry overall, okay, now we see business travel really getting back to where it was before the pandemic.
So speaking of the pandemic, Bill, I'm going to come back over to you. Have we seen the peak or maybe even the end of the whole revenge travel a lot of people were talking about, that people just wanted to get back out after being cooped up during COVID?
Yeah, leisure unchained, if you will. The peak was really in 2022, and we've seen some normalization in demand on the leisure front in 2023. We expect further normalization next year. That could be offset by increasing inbound international travel, but certainly it's still better than it was in 2019. We're just kind of coming back to a level. I'm guessing we're gonna end it maybe 5% above 2019 on a permanent basis, given the flexibility of the workplace.
So, Bill, you also have some picks for us in the leisure space. Give us a sense. What's your top pick when it comes to the leisure space and why?
Well, you mentioned Hilton earlier. That's certainly been one of our top picks this year. It's performed well. The combination really of a spectacular balance sheet, the ability to repurchase 5% of their shares outstanding each year, and growth through new unit growth, NUG growth, 5%, 6% a year. So it's a really good long-term play in the space. The REITs, we've got a couple of REIT picks, more interest rate sensitive, obviously, but Raymond Hospitality, RHP, 70% of their demand comes from group business. I mentioned earlier that group remains very strong. And then Host Hotels, HST, the only Latin REIT with investment grade.
Yeah, Raymond also owns the Grand Ole Opry, so they get some of that tourist benefit as well. Phil, I want to give you the last word. We're going to be talking about a very dovish Mary Daly in just a few minutes at the end of the show. The idea of rate cuts, the Fed easing its policy, how does that impact airline travel?
Well, it certainly will help. I mean, all businesses will benefit from lower interest rates. I think the airlines right now are in a position where they're comfortable with the projections for 2024. What I think they're watching, a couple of things they're watching, Frank. One is, now that they've got the labor cost out of the way, what happens with jet fuel? Obviously, they always watch that. And then the other thing is what happens with international travel. We've seen some improvement in terms of the international airlines, like in Europe, adding flights over here to the U.S. Does that continue to be as robust next year as we've seen it over the last year?